Hello, friends. Welcome to a new edition of our weekly webinars from Proficient. I am Shumay Goswami. This is 16th of November 2018, Friday, and it is 5 o'clock. Market just closed 1.5 an hour ago, and we got a bit interesting closing. Today we are going to cover uh, the technical aspects of price actions, whatever happened over the past few days, and also what is likely to happen next week in equities and in commodities. I'm coming back to equities, but let me first of all start with commodities, because something very exciting is happening in commodity space. Uh, you can see on my screen the gold daily chart, and right now gold is trading at around $1,216 per ounce. And what is very interesting in gold chart is that uh, there is a possibility that gold is forming a bottom, right? And the bottom is at around 1190 to 1200 region. The reason behind is that there has been some pretty strong demand for this precious metal, and gold has not broken this level in past 3 months. There were some tests and it is as of now holding, although the trend is overall down because prices are still below the 200-day moving average and all those things. Slope of the moving averages are down, but the October high was at 1240. Right now it is trading at 1216 region. So you can keep a stop loss at 1200 odd levels, and you can buy gold on little pullback, and chances are high that 1240 will be taken out. So that is going to be our nearest target for gold. And if gold successfully manages to trade above that region, then 1270 is even possible. And 1270 is where the 200-day average for gold resides. And if gold manages to go beyond that, then the bear market officially ends for gold. So that is what is happening in gold. Let us also take a quick look at the crude oil. What crude oil is doing is exceptional, and it is reminding me of the strong sell-off that occurred in 2015 and in early 2016 in crude oil. In a time of over 6 weeks, we have seen some 20% decline in Brent crude oil and also the light sweet crude oil. WTIC right now is trading at around 56.6. It made a high at around $76 per barrel region in early October, and now it is trading at around 20% discount. So definitely prices are in downtrend. There is no doubt about that. Many supports have been broken. 200-day moving averages and the 50 and 100-day moving averages are all sloping downward, and prices are trading below that level comfortably. So trend is no doubt downward, but important point is that prices are extremely oversold. Number one, there are some positive divergences appearing, and whatever appears from very recent price action is that there is some little bit of consolidation formation in crude oil. So I'm not talking about any trend reversal as yet, because any sort of trend reversal, even if prices rises or makes a V-shaped recovery from here, that will not survive, because prices after such big correction need to form a base kind of thing. So unless that base is occurring, we cannot say for sure that any pullback or any trend reversal is happening. Whatever we can see is a little bit of pullback, right? There are various geopolitical factors playing out there, mostly from the um, supply side. This commodity is basically driven by supply side, and okay, so we need to spend a little bit of time here, say 5 days or 7 days, and after that, if crude forays above some 59 or $60 a barrel region, then we can see some little bit of pullback, and maybe some 6-7% of rise is possible in crude oil. So we are not recommending to sell crude oil at this level. We are not recommending to buy immediately, but if prices do not decline further from this level, and after some little bit of base formation, if prices go above 59 or 59.5 a barrel region, you can take a buy position with stop loss at 56.5, and for a target of 65 odd levels. So that is the view in energy sector, especially in crude oil. So that was our opinion in commodity space, and let us also take a quick look in what dollar is doing, right? Because some exciting things are also happening in dollar. So this is the dollar index, as you can see. Yeah, dollar index is not showing that much weakness. So whatever we are seeing in our Indian market is basically short-term pullback kind of things. So dollar is basically strong against 6 major currencies, and we are not expecting dollar index to violate 96 or 95.5 levels anytime soon, because last bottom was made at 95.5 odd levels. So if there is a short-term weakness in dollar index, so that will be opportunity to buy. Now, having said that, let us now come back to our equity market. What Nifty, our stock index, have been doing, and what is likely to happen. This is the daily chart of Nifty, as you can see on my screen. And the most important thing is that there is a bearish crossover of 2 moving averages. The blue one is the 50-day, and the red one is the 200-day. So there is some sort of dead crossover, which is of course a bearish sign, but I'm not going to attach much credibility to this signal as yet. If prices actually go above the 200-day moving average of 10,760 odd level, 60 or 50 odd level. So what is the point? The point is that we made a top in Nifty at around 11,760 odd levels late August, and after that we have seen nearly 17% of correction. Prices came to the doorstep of 10,000, did not break it, just for 3 or 4 points, and right now the Nifty has been in a choppy range for past nearly 6 weeks, and the range is defined as 10,690 to 10,000, approximately 10,000 to 10,700. And we can also see a little bit of head and shoulder, inverse head and shoulder kind of formation, and prices are actually trading above the in the higher region of this consolidation phase. But officially it is still a bear market because prices are trading below the 200-day moving average. So the point is that we need to see prices to close above 10,670. That is the immediate resistance. In fact, there is a confluence of resistance at 10,760 odd levels. Other moving averages like 50-day is also residing there. Now, there are some momentum oscillators like stochastic and RSI. Those are signaling that market has gained some strength over the past few weeks. Market is not as weak as it used to be in last week of August. So that is giving us more reasons to believe in this strength. And right now it closed at 10,680 odd levels. Last bottom was made at 10,485 on closing basis. That happened this Monday only. So this week started with extreme weakness, and it appeared that prices are continuing the downward journey, but that actually did not materialize. Prices recovered and recovered very smartly, and right now it is challenging its third week of October high, which is at around 10,710, made on 17th of October. So if 10,710 is taken out, and after that 10,760 odd levels are taken out, and if prices do not violate the 10,485, the last bottom on daily chart, then there is a fair chance that with which we can say that the worst is over for the time being. The worst is behind us, and that will give us more reasons to trade Nifty from the long side. So that is the view. We have to look out for the 200-day average resistance, and pullbacks will be buying opportunities in Nifty, but provided 10,485 is not broken, so that will be the stop loss. Now there are certain pockets of outperformance as well, and we are going to now talk about those pockets of outperformance where stock prices are more likely to rise, or stocks are more likely to outperform the Nifty. Okay, the most credible sector that comes to our mind is the FMCG stocks. Among the FMCG stocks, the first and the most important is Britannia. We think Britannia, the stock of Britannia is poised for even higher prices from here. This is the daily chart of Britannia. As you can see from this chart, that the prices this week closed above the 200-day and the 50-bar moving averages. Before that, there was a considerable pullback. So after the pullback, chances are very high that the previous uptrend is resuming, and the previous top was at 7,000. So today it is closing at 59.47. So you can keep a stop loss at around 5,700 odd levels, and if that is not broken, then 6,500 odd levels is in the offer, and over a period of time we can even see the all-time high to be taken out. That is the 7,000 odd levels becomes the long-term target for Britannia as well. Private banking are doing well. Mm, so I can see ICICI Bank in this space. Yeah, this is the daily chart of ICICI Bank, and the long-term chart is pretty strong, although the stock is going through some turmoil. But as we can see from this chart, that ICICI Bank actually has closed at its lifetime high on a weekly basis, right? So 367 is the price, and this is the lifetime high for ICICI Bank on a weekly basis, weekly closing basis. So definitely it is an outperforming stock. It goes there as our buying candidate. And although there was some little bit of weakness today, but these sort of weaknesses can be taken as a buying opportunity. You have to keep a stop loss at around 350, and ICICI Bank can be traded from the long side. In the private sector banking, HDFC Bank is also good enough. Not as good as ICICI Bank, but definitely it is shrugging off its weakness. You can see the diagram here that prices are closing above the 200-day and the 50-day moving averages, and it is also like Nifty trying to break out of its consolidation phase of past 2 months. If it consistently close above 2000, which happened today, 2010 2020 odd levels, then that will be very good. I can see a resistance at around 2050, and if that is taken out, then the lifetime high of around 2220 odd levels can be challenged by HDFC Bank. So private banking sector is also likely to outperform. From consumer goods, we can see that we recommend for next week two stocks. One is Asian Paint. Asian Paint is also outperforming the index, overall index, and it can be traded from the long side. Past 2 or 3 sessions saw some consolidation after a good movement from 1140 odd levels to 1320. But breakouts have already occurred, and this breakout is likely to continue going forward. So you have to keep a stop loss in Asian Paints at around 1275 odd level, and trade this stock from the long side. The 1450 or 1480 odd levels become the target for Asian Paints. And one very important stock is Havells. Yeah, Havells is just leading this pack of consumer goods, and also although there was a little bit of a weakness in Havells today only, but the stock is consistently outperforming Nifty. There is no doubt about it. So yeah, you can buy Havells in this present weakness. Currently it is trading at 674. Overall stop loss will be at 645, and target will be some 750 odd levels. So this sector is also looking good. So all these sectors like FMCG, like private banks, consumer goods, all these sectors are can be traded from the long side because they are outperforming Nifty. If Nifty does not show a lot of weakness, then these stocks are likely to outperform in the higher side. Now, having said that, there are also some underperforming stocks, underperforming sectors, and if Nifty does not do well, That is, if Nifty fails to go past its 200-day moving average of 10,760 odd level, then there are certain stocks that we will like to trade from the short side. And most important of this is the auto sector stocks, the likes of Tata Motors. We all know about Tata Motors. Tata Motors have been exceptionally weak for many months now. It is making new lower high and lower lows. So that is definitely a downtrending stock. So Tata Motors remain there in our watch list. Ashok Leyland have also become very weak lately, and from this sector, Ashok Leyland is also looking to be a good shorting candidate. It also posted a not so impressive result few days ago, and as a result got hammered of it. Right now trading below the most important moving averages of 250-day, and not only that, it is also violating the it is also violating the July low, right? So the July pullback was a little bit of shocking, but now that Ashok Leyland is challenging that low very consistently, is does not go well. It is likely that the stock has more pain in store, and you can sell this stock and trade from the short side. So right now we can sell this with a stop loss of around 114 odd levels, and that will be possible if the stock rises a bit. Else, if there is any intraday strength, we can also use that. What is the likely target? Let us check. Yeah, the present value of 106 is anyway a support, but chances are high that the support will be broken. Immediate support will be then 95, and yeah, that will become the immediate support. After that, we will take stock of the situation. So Ashok Leyland also looking exceptionally fragile and weak, and could be traded from the short side. So auto industry stocks are not looking impressive, and that raises doubt about the strength of the Nifty as well, because auto sector contributes quite a bit of weightage to Nifty, and if that sector does not perform as well, then there will be some doubt. But anyway, for Nifty, 10,760 is an important level to watch out for. Another underperforming sector we have to look is pharma stocks, and in that pharma stocks, we can see Sun Pharma. This is Sun Pharma. It was also hammered down last few months and is not showing any form of strength. Any kind of pullback will be selling opportunity in Sun Pharma. Not to forget about Cipla as well. Cipla is also looking fragile and weak, although there is some support, some long-term support here at 522 odd levels, but trend is nonetheless down. Some pullback might occur at this level in Cipla. 550 odd levels can be possible, but that is a strong resistance, and we can sell the stock at those levels. Sun Pharma Advanced Research, which is also called Spark. This is the chart of Spark, and also it is the chart is self-explanatory. The weakness is visibly seen. So these stocks from pharma sectors are also extremely weak going forward. So if Nifty cannot manage to go beyond its 200-day moving average, then these stocks will likely drag the Nifty down. So that was the view for next week. we are maintaining a cautiously bullish opinion in Nifty, but we have to look out for the 200-day moving average, and chances are high that it will be taken out, but you have to keep a stop loss. Last bottom is at 10,485, so that will be the stop loss for Nifty. And auto stocks and pharma stocks are weak. On the other hand, private banking stocks are strong, pharma stocks are strong, consumer goods are strong. So that's it. Please trade with proper risk management strategy. You have to trade with stop loss, and let's see what pans out next week. So signing off. Take care.